Whenever it comes to life insurance, the most common question that clients would ask is the question of, which is better for me, term life or whole life? In my other video, we've looked at a quantitative comparison of a whole life plan versus the buy term invest the rest approach, and also the considerations to have as to whether a whole life plan will be better for you. In this video, we'll be looking at the 3 considerations to have as to whether a term life insurance will be better for you. Hopefully by the end of this video, you can decide which instruments are you more comfortable with, and without further ado, let's get started. Number 1, you need this coverage for a short duration of time. Now, just as you will rent an apartment if you intend to stay at a place for a short duration, you will also just rent your coverage if you need it for a short duration of time. For the context of insurance, short duration, in this case, refers to anything that is lesser than 20 years. So for things like your mortgage liabilities and children's dependency, it does not make sense for you to commit to a whole life insurance to provide for this temporary coverage, because let's face it, you will not be paying for your mortgage for the entirety of your life, and neither will your children be dependent on you for life. To give you an example, if you need a basic death coverage for only 20 years, you will see that the net total premiums payable, which is the total premiums paid minus the surrender value receivable, is actually lower for the term life plan rather than the whole life plan. Granted, a whole life insurance plan does continue to provide coverage beyond 20 years, and the surrender value will continue to increase. But if you only need this coverage for a short duration of time, these features are not a necessity. Number 2, you prioritize on return and don't mind taking on the risk. If, however, you need this coverage for a long duration of time for things like your income replacement and legacy, a term life plan may be better for you if you prioritize on returns and don't mind taking on additional risk to invest. As we've seen in the buy term invest the rest versus the whole life video, if you intend to be covered till 70 years old, term life will be better if you can earn a return of more than 4% a year. If you intend to be covered for a lifetime, term life will be better if you can earn a return of more than 6% a year. That said, while in theory, earning a 4, 6, 8 or 10% a year seems very doable, in practice it is not as easy as it seems because of discipline and emotional factors that may impede your performances. Contrary to popular belief, the market does not always go up. There are periods of time where the market returns to 0% for a long duration. Unfortunately, the majority of the people out there don't have the know-how to invest, and neither do they want to put in the time to learn or to do their market research, which brings me to my last point. Number 3, you know how to invest and have the time to do it. If you need this coverage for a long duration of time and you have the know-how and time to invest, a term plan may be better for you as you will be able to receive a higher payout and surrender value. We've seen the difference in the payout and surrender value behavior of a buy term invest the rest approach and a whole life plan in the explainer video. And it is clear that if you have the knowledge, time and confidence to deliver a consistent performance of above 4 to 6% return a year, a term life plan will be better for you. For a more in-depth look at the numbers, go and watch the video on buy term invest the rest versus whole life. The link will be in the description below. Summary. So there you have it. These are the 3 considerations to have as to whether or not a term life plan is better for you. To recap, if you need a coverage for a short duration of less than 20 years, a term life plan is more suitable than a whole life plan. If, however, you need a long-term coverage of more than 20 years, a term life plan may be better if you can deliver a consistent return of more than 4 to 6% per year. Now that's all I have for this video today. If you found this video useful, do drop me a like and subscribe to this channel to stay updated with the weekly upload. If you do not know how to get started with your insurance planning, or if you do not have the time to do your market research, you can consider engaging an independent financial advisor who can help you make sense of the market and shortcut your insurance planning process. To find out more information about how you can benefit from my financial and insurance planning services, you can check out what I do on my website and reach out to me directly. The link is in the description below. Stay safe and I hope to hear from you soon.